Internal Revenue Service IRS tax news. IRS unveils, quote, dirty dozen, end quote, list of tax scams for 2020. Americans urged to be vigilant to these threats during the pandemic and its aftermath. IR 2020-160, July 16, 2020, Washington. The Internal Revenue Service today announced its annual, quote, dirty dozen, end quote, list of tax scams with a special emphasis on aggressive and evolving scams related to coronavirus tax relief, including economic impact payments. So this is something that the IRS does yearly to go over these scams. There's always going to be scammers out there with relation to the IRS because it's a big body, a big agency that they could try to impersonate. And of course, they're going to try to get money such as refunds and other types of scams that could be related to it. So the IRS tracks that information, tries to keep on top of it. Obviously, this year, we've had a lot of new laws coming out. We've had a lot of deadlines be pushed out. We've had economic impact payments go out. So that gives opportunity to scammers to have these new kind of things that go out, and these deadlines being changed to possibly have an opportunity to scam. So that might be included in some of this year's update of the IRS's Dirty Dozen. Back to the text. This year, the Dirty Dozen focuses on scams that target taxpayers. The criminals behind these bogus scams view everyone as potentially easy prey. The IRS urges everyone to be on guard all the time and look out for others in their lives. Quote, tax scams tend to rise during tax season or during times of crisis, and the scams artists are using pandemic to try stealing money and information from honest taxpayers, end quote, said IRS Commissioner Chuck Rettig. Quote, the IRS provides the Dirty Dozen list to help raise awareness about common scams that fraudsters use to target people. We urge people to watch out for these scams. The IRS is doing its part to protect Americans. We will relentlessly pursue criminals trying to steal your money or sensitive personal information. End quote. Sensitive personal financial information, end quote. Taxpayers are encouraged to review the list in special section. There's a link here to that special section on irs.gov and be on the lookout for these scams throughout the year. Taxpayers should also remember that they are legally responsible for what is on their tax return, even if it is prepared by someone else. Consumers can help protect themselves by choosing reputable tax preparers. This is an important point that I don't think many taxpayers really understand. If you're a tax preparer, you should be a reputable tax preparer, and you should be marketing that idea by letting people know exactly what that means to be the reputable tax preparer. So note that when people have their tax return prepared, they often think that, well, the tax preparer is preparing the return, and therefore, if the IRS has a problem, you could say, well, I didn't prepare the tax preparer prepared it. But the tax preparer is basically acting as an agent. You're still signing the tax return. Now, the tax preparer will have the P10 that they'll put on if they're a paid tax preparer on the return. But ultimately, the IRS, if there's something wrong with the tax return, are going to go back to the tax preparer and ask about what is wrong. And note that, of course, that could happen. They have 3 years to come back for just about any reason. They can randomly pick the return and have an audit within that time period. And if there's something substantially wrong, then they could come back at a longer time period than that. So when you're thinking about get the tax return prepared, you want to make sure that it's prepared well, because the recourse for the IRS is going to come back to you if there are any problems. If there's scam artists with the tax returns, oftentimes the scam artist, like any scam, is going to be a short-term kind of thing. We're going to do your tax return this 1 year, and this, then we're going to be gone. We're not going to, next year, we're going to be somewhere else maybe, or something like that. Well, you don't want a situation like that, because obviously the IRS is going to take, if there's something wrong with it, then the IRS is going to take a few years. It's going to come back with an audit. And if the tax preparer is gone at that point in time, then that's not good, right? So you want a reputable tax preparer that's going to stay, and usually that means they're going to be a long-lived tax return. You're going to say, I want to build a relationship with the tax preparer who has an established business, who's going to be around, who isn't here on the short term just to make tax returns this year, but hopefully is going to be their longer term, because that's more likely to be working with someone, of course, that has an invested interest beyond just the short-term gain of today, but a longer-term interest. And then you can, if there's so you can then be more sure that the tax return is prepared correctly, which is the safest thing to do in the long run, because again, the IRS, if there is a problem with it, will come back later for it when your mind is not completely on what exactly happened in the tax return. And you may then have them around if they're still your tax preparer that can help you with any kind of problems with it. So back to the text. The IRS urges taxpayers to refrain from engaging potential scammers online or on the phone. The IRS plans on unveil a similar list of enforcement and compliance priorities this year as well. So note that, when you talk to the scammers, they often contact with email and then try to get people on the phone, or at least drive people to the website, and then they try to basically get more information. What you want to do is not even talk to them. You don't even want to talk to the scammers, because scammers are good at scamming, and that means that if they get you on the phone, they could have some information that could, if you start having any kind of thought of maybe this is legit, then they could have some information that can lead you down that path to basically feel like this is a legitimate call. So their goal could be just simply to get contact with you to basically use whatever information they have to seem legitimate and then get more information. So the goal is just to ignore them completely and not even engage in any way, shape, or form. And if you have a question about a particular contact, you typically want to go directly to the IRS website and look it up from the IRS source, rather than calling someone who is quite likely a scammer and may be good at it. Back to the text. An upcoming series of press releases will emphasize the illegal scams and techniques businesses and individuals use to avoid paying their lawful tax liability. Topics will include such scams as abusive micro-captives and fraudulent conservation easement. Here are this year's, quote, dirty dozen scams. So we got phishing leading off as the first scam. Taxpayers should be alert to potential fake emails or websites looking to steal personal information. The IRS will never initiate contact with taxpayers via email about a tax bill, refund, or economic impact payment. So if you get an email, and usually there's some kind of urgency in the email, you got to get back to us soon, or visit this website now, or giving us this information immediately, or you won't get your economic impact payment, or something like that. IRS doesn't do that. The IRS will not do that. So back to text. Don't click on links claiming to be from the IRS. So the IRS won't require you to click on any type of link or anything like that. So be wary of emails and websites. They may be nothing more than scams to steal personal information. Obviously, the IRS is an intimidating agency, one of the most intimidating agencies in the government. So people see a letter from the IRS and get kind of scared. So that's why scammers like to impersonate the IRS, because you have a gut reaction. Well, I better take care of this thing. So just remember that the IRS doesn't typically do that. And if you have a question about it, then they never do that. They never have a link in an email or anything like that. But if you have questions about it, again, go to the IRS website itself. IRS criminal investigation has seen tremendous increase in phishing scams utilizing emails, letters, texts, and links. These phishing scams are using keywords such as coronavirus, COVID-19, and stimulus in various ways. These scams are blasted to large numbers of people in an effort to get personal identifying information or financial account information, including account numbers and passwords. Most of these new scams are actively playing on the fear and unknown of the virus and the stimulus payments. For more IR 2020-115, IRS warns against COVID-19 fraud, other financial scams. There's a link to that here. Next up, fake charities. Fake charities. Criminals frequently exploit natural disasters and other situations such as current COVID-19 pandemic by setting up fake charities to steal from well-intentioned people trying to help in times of need. Fake charity scams generally rise during times of these. So when you have a charity, you want to make sure that it's a legitimate charitable organization when you give money to it. So fraudulent schemes normally start with unsolicited contact by telephone, text, social media, email, or in person using a variety of tactics. Bogus websites use names similar to legitimate charities to trick people to send money or provide personal information. They may even claim to be working for or on behalf of the IRS to help victims file casualty loss claims and get tax refunds. Taxpayers should be particularly wary of charities with names like nationally known organizations. Legitimate charities will provide their employer identification number, EIN, if requested, which can be used to verify their legitimacy. Taxpayers can find legitimate and qualified charities with the search tool on IRS.gov. So if you have a charity and if they sound interesting, you probably want to look them up further before giving money instead of giving just like on the fly. You probably want to say, that sounds interesting. Maybe I'll look it up and then give more information. One way to look them up and verify their information is to ask for the employer identification number, the EIN. And then the threatening impersonator phone calls. So that's going to be the next item, threatening impersonator phone calls. This is going to be one that's particularly kind of mean because they're going to be acting like the IRS and being intimidating with relation to the IRS. Back to the text. IRS impersonation scams come in many forms. A common one remains bogus threatening phone calls from a criminal claiming to be with the IRS. The scammer attempts to install fear and urgency in the potential victim. In fact, the IRS will never threaten a taxpayer or surprise him or her with a demand or immediate payment. So if someone calls saying that they're the IRS, then they might try to install some kind of, you have to do this now. It's got to be now, do this now. And then they're going to install fear, being from the IRS, which is an intimidating agency for most people, and then in a flustered state try to pick up information from that type of call. So remember, the IRS is basically the IRS is a agency, and there's a lot of bureaucracy within the agency. So the bureaucrat you can't imagine the bureaucrat normally calling people and being really threatening. They're usually very somewhat benign, but then the action just builds up over time. So it's more likely you'll get a letter from the IRS that says respond in 30 days and then respond in 30 days. And then, you'll typically be more aware of the action that will be taken, and the IRS will outline its steps pretty well, given the fact that they are a very bureaucratic, type of agency typically. So if you get a phone call with someone threatening immediate action, from the IRS, probably not legit, and you probably just want to say, hey, look, I'm just going to hang up. I'm just going to check it out myself at the IRS.gov website and stop the engagement as soon as you can, and then check it out yourself from the source. Just say, I'm sorry, I'm going to check it out myself. I'll look into it right now. I'll get back to you. I'm looking up the IRS right now. If you have any idea or thinking it's legitimate, and then just remove yourself from the situation. Back to the text. Phone scams or vishing, voice phishing, pose a major threat. Scam calls, including those threatening arrest, deportation, license revocation if the victim doesn't pay a bogus tax bill, are reported year-round. These calls often take the form of a robocall, quote, wobocall, a text-to-speech recorded message with instructions for returning the call. And I know these have been used a lot. I've had some of these been reported to me, and I've seen some of these types of calls. So if you get a robocall, then again, you don't want to call back, because that's one way that the scammers can kind of filter through the people that they want to actually engage with. So the people that call back are more likely the people that have some question about this, and that's when the live person will spend their time, scamming that one individual person instead of the person trying to call everybody on the list. So you don't want to call that number. You want to go back to the IRS if you have any questions about it. But in any case, most likely and almost surely that will be a not a legitimate call from the IRS. The IRS will never demand immediate payment, threaten, ask for financial information over the phone, or call about the unexpected refund or economic impact payment. Taxpayers should contact the real IRS if they worry about having a tax problem. And that's always the out. You just say, sorry, I'm going to hang up on you now. I apologize if you're the IRS, but I'm going to call the IRS like right now. So, and then just stop the conversation cold and move forward with that. Social media scams. Taxpayers need to protect themselves against social media scams, which frequently use events like COVID-19 to try tricking people. Social media enables anyone to share information with anyone else on the internet. Scammers use that information as ammunition for a wide variety of scams. These include emails where scammers impersonate someone's family, friends, or coworkers. So that's a typical kind of phishing scam, another kind of way to get information for a phishing scam, more personal information, so that they can then use that social proofing in order to get more information from that point forward. Social media scams have also led to tax-related identity theft. The basic element social media scams is convincing a potential victim that he or she is dealing with a person close to them that they trust via email, text, or social media messaging. Using personal information, a scammer may email a potential victim and include a link to something of interest to the recipient, which contains malware intended to commit more crimes. Scammers also infiltrate their victims' emails and cell phones to go after their friends and family with fake emails that appear to be real and text messages soliciting, for example, small donations to fake charities that are appealing to the victims. Then we have the EIP, or refund theft. The IRS has made great strides against refund fraud and theft in recent years, but they remain an ongoing threat. Criminals this year also turned their attention stealing economic impact payments, the EIP payments, as provided by the Coronavirus Aid, Relief, and Economic Security, the CARES Act. So obviously we had this new thing, the economic impact payments, which the IRS was just like spitting out money that's nonstop with the they're just sending out checks, and they're doing it before the tax return was prepared, and they're trying to do it with limited information to get the money out as soon as possible. And that's scammers are going to look for that, so they turn their attention to the economic impact payments. So that's going to be a point that you want to make sure that you're aware of, because that's a one-time thing that's unusual. Much of these stems from identity theft, whereby criminals file false tax returns to supply other bogus information to the IRS to divert refunds to wrong addresses or bank accounts. So they might try to say, here's a legitimate person, but we're going to change their address, so they send the payment somewhere else, some other bank account or something like that, or try to set up some information for the IRS to send out the checks, the economic impact checks. So the IRS recently warned nursing homes and other care facilities that economic impact payments generally belong to the recipients, not the organizations providing the care. So that's going to be another item here. So they want to make sure that the payments are going out directly to the individual, the recipients, not the place of care. This came following concern that people and businesses by taking advantage of vulnerable populations to receive the payments. These payments do not count as a resource for determining eligibility for Medicaid and other federal programs. So they're not going to change if you get any kind of support program. They're not counted as income, which would typically be bad for the support program, which is good to increase the support program information. So they also do not count as income in determining eligibility for these programs. See IR 2020-121, IRS Alert Economic Impact Payment belong to recipient, not nursing homes or care facilities, for more. Taxpayers can consult the Coronavirus Tax Relief page, there's a link to that here, on irs.gov for assistance in getting the earned income, the economic impact payments, the EIPs. Anyone who believes they may be a victim of identity theft should consult the Taxpayer Guide to Identity Theft on irs.gov. There's a link to that here. Next, we have senior fraud. Senior citizens and those who care about them need to be on alert for tax scams targeting older Americans. The IRS recognizes the pervasiveness of fraud targeting older Americans, along with the Department of Justice and FBI, the Federal Trade Commission, the Consumer Financial Protection, the CFPB, among others. Seniors are more likely to be targeted and victimized by scammers than other segments of society. Financial abuse of seniors is a problem among personal and professional relationships. Anecdotal evidence across professional services indicates that elder fraud goes down substantially when the service provider knows a trusted friend or family member is taking an interest in the senior's affairs. Older Americans are becoming more comfortable with evolving technologies such as social media. Unfortunately, that gives scammers another means in taking advantage. Phishing scams linked to COVID-19 have been a major threat this filing season. Seniors need to be alert for a continuing surge of fake emails, text messages, websites, and social media attempts to steal personal information. Scams targeting non-English speakers. IRS impersonators and other scammers also target groups with limited English proficiency. These scams are often threatening in nature. Some scams also target those potentially receiving an economic impact payment and request personal or financial information from the taxpayer. Phone scams pose a major threat to people with limited access to information, including individuals not entirely comfortable with the English language. These calls frequently take the form of a robocall, a text-to-speech recording message with instructions for returning the call, but in some cases may be made by a real person. These con artists may have some of the taxpayer's information, including their address, the last 4 digits of their social security number, or other personal details, making the phone calls seem more legitimate. So again, a good scammer could have a couple key things that they can easily pick up these days on the internet, because everything's on the internet these days. And that means that if you engage them in an actual phone call, they can start to sound pretty legitimate, possibly, given these couple factors of information they have. So what you want to do is just not talk to them. Just don't even talk to them. Back to if at all possible. And when you are engaged in them, hang up and say, I'm going to the IRS. Do it as nicely as possible. Just say, look, I'm going to the IRS themselves. I'll check it out from there. If you are from the IRS, I apologize, but I'm getting in contact with you directly from them at this time. Goodbye. And then just hang up. Back to the text. A common one remains the IRS impersonation scam. For a taxpayer receives a telephone call threatening jail time, deportation, or revocation of a driver's license from someone claiming to be with the IRS. Taxpayers who are recent immigrants often are the most vulnerable and should ignore these threats and not engage the scammers. So that's really the point. Just remove yourself from it and then go to the source. Unscrupulous return preparers. So unscrupulous return preparers is the next one. Selecting the right return preparer is important. They are entrusted with taxpayers' sensitive personal data. Most tax professionals provide honest, high-quality service, but dishonest preparers pop up every filing season, committing fraud, harming innocent taxpayers, or talking taxpayers into doing illegal things they regret later. So you want to take some time to make sure you're picking up the best tax preparer. And again, the way you do that, you want to make sure someone's not a scammer and is a legitimate tax preparer. You want to see, are they someone who's been around in the past or has the intention to be around in the future, and then set up a long-term relationship. A scammer is someone who's going to be around for the short time, pick up short-term profits based on misinformation, meaning lies, right? They're gonna earn money on lies, and then once the fallout happens, they're gone. And that's usually what a scammer does. They're not around anymore once the problem happens. With tax returns, if they're looking to get a refund, the refund happens now. The problem's going to happen when the IRS does an audit, which is going to happen within 3 years, which in that time they could be gone. So you want to make sure that you're dealing with someone, typically, if they have a past that's been in the place, they're more likely to be legitimate, and you want to build a relationship and say, hey, I'd like you to do my tax returns in the future, to be continually business related, and then they have a vested interest in you, the community, and themselves in it, and therefore that's a legitimate business as opposed to a scammer, which does not have that invested interest. Back to the text. Taxpayers should avoid so-called ghost, end quote, preparers who expose their clients to potentially serious filing mistakes, as well as possible tax fraud and risk of losing their refunds. With many tax professionals impacted by COVID-19 and their offices potentially closed, taxpayers should take particular care in selecting a credible tax preparer. Ghost preparers don't sign the tax returns they prepare, and that's going to be a dead giveaway. If you're paying someone to make the tax return, then you are still principally liable. The IRS is gonna come back to you, but the IRS knows who the tax preparer is because they should be signing it and putting their P10 on it if they're a paid tax preparer. If they're not doing that, then you don't want to have your tax return prepared by them. Back to the text. They may print the tax return and tell the taxpayer to sign and mail it to the IRS. For e-file returns, the ghost preparer will prepare but not digitally sign as the paid preparer. By law, anyone who is paid to prepare or assists in preparing federal tax returns must have a preparer tax identification number P10. Paid preparers must sign and include their P10 on returns. Unscrupulous preparers may also target those without a filing requirement and may or may not be due a refund. They promise inflated refunds by claiming fake tax credits, including education credit, earned income credit, EITC, and others. Those are the two credits, by the way, that are refundable credits. That means if your income is low, you may have access to those. So those are the ones that if someone was going to kind of defraud the system or inflate, they might go after those refundable type of credits. Back to the text. Taxpayers should avoid preparers who ask them to sign a blank return promising a big refund before looking at the taxpayer's records or charge fees based on a percentage of the refund. So you typically should not be charging a fee on the refund because that the IRS doesn't typically allow that from the tax preparers because it gives an incentive to try to inflate a refund, and the goal here is to make the tax return properly. So if they're saying that the payment is based on the amount of the refund, not a good sign. Really not a good sign if they have you sign the tax return before they make it. That's really not good. Do not do that. Okay, back to the text. Taxpayers are ultimately responsible for the accuracy of their tax return regardless of who prepares it. Taxpayers can go to the special page on irs.gov for tips on choosing a preparer. So you got the choosing a preparer link here if you want to go there. And the bottom line here is remember that the IRS is going to go back to the taxpayer first. So you want to make sure you got a good preparer that you trust because the IRS is going to be holding you and responsible if there's a problem with the return, even though it was prepared by a preparer. Back to the text. Offer and compromise mills. So offer and compromise mills, taxpayers need to wary misleading tax debt resolution companies that can exaggerate chances to settle tax debts for, quote, pennies on the dollar, end quote, through an offer and compromise OIC. These offers are available for taxpayers who meet very specific criteria under law to qualify for reducing their tax bill. But unscrupulous companies oversell the program to unqualified candidates so they can collect a hefty fee from taxpayers already struggling with tax debt. So the offer and compromise, those are the kind of, if you see commercials that say, if you have over 10,000 of tax debt, often is it going to be a number that they would have. Contact us. We may be able to do an offer and compromise and lower the tax debt. Now, there is an offer and compromise out there, but, there's specific circumstances in when you would qualify to have an offer and compromise. And that would typically be in a case where, it's not likely that you'll be able to pay the debt given your income level and your balance sheet items. And so you negotiate with the IRS. So it's a legitimate thing, but it can be oversold as a way to substantially reduce the debt in because it only applies to certain situations. So you can look up the offer and compromise, and there's a lot of detail on it on when it would apply. And I would do your own research first, and then when looking for a firm for an offer and compromise, make sure you find a legitimate firm out there that to process the offer and compromise with you. Back to the text. These scams are commonly called OIC or, quote, mills, end quote, which cast a wide net for taxpayers that charge them pricey fees and churn out applications for a program they're unlikely to qualify for. Although the OIC program helps thousands of taxpayers each year reduce their tax debt, not everyone qualifies for an OIC offer and compromise. In fiscal year 2019, there were 54,000 OICs submitted to the IRS. The agency accepted 18,000 of them. Individual taxpayers can use the free online offer and compromise pre-qualifier tool to see if they qualify. So you might want to check out that tool if you're over 10,000 of tax debt. I would look into the OIC information first on the IRS. A lot of it is outlined there, and then proceed from there. And you probably want to maybe go to the IRS website or make sure you're finding a reliable source to look into the offer and compromise and who can prepare that for you if you're going to look for help with that preparation process. The simple tool allows taxpayers to confirm eligibility and provides an estimated offer amount. Taxpayers can apply for an OIC offer and compromise without third-party representation, but the IRS reminds taxpayers that if they need help, they should be cautious about whom they hire. Fake payments with repayment demands. Criminals are always finding new ways to trick taxpayers into believing their scam, including putting a bogus refund into the taxpayer's actual bank account. Here's how the scam works. A con artist steals or obtains a taxpayer's personal data, including social security number or individual taxpayer identification number, ITIN, and bank account information. The scammer files a bogus tax return and has the refund deposited into the taxpayer's checking or savings account. Once the direct deposit hits the taxpayer's bank account, the fraudster places a call to them, posing as an IRS employee. The taxpayer is told that there's been an error and that the IRS needs the money returned immediately, or penalties and interest will result. The taxpayer is told to buy specific gift cards for the amount of the refund. The IRS will never demand a payment by a specific method. There are many payments options available. Taxpayer. So that's a more complicated type of transaction here. So they're basically saying that they have the bank account. If they have the bank account information, you might say, why wouldn't they just pull money out of the bank account? Well, typically, the bank can see where the money is being pulled out, where it's going. So they can't just pull the money out, even if they could, but there's a audit trail there. So what do they do instead? They have you pull the money out. How? When they call the individual and say, "Hey, look, there's money in the account, and we need it to be removed back out, and then you take the money back out of the account." That's how I believe that would work. So it's a bit more of a complicated scam here. So, but to do that, they would need the bank account information and whatnot somehow to put the money into the account. So, anyways, back to the text. The IRS will never demand payment by a specific method. So if the IRS has many methods to be paying them. So if it's going to be some specific gift card type of thing, payment method that you need to be paying them back with or something, if some problem happened, that's not how the IRS will typically work. There are many payment options available to taxpayers, and there's also a process through which taxpayers have the right to question the amount of tax we say they owe. Anytime a taxpayer receives an unexpected refund and a call from us out of the blue demanding a refund payment, they should reach out to their banking institution and to the IRS. So if you had a call out of the blue from that and something was in your bank account or whatever, you'd want to contact the bank account and say, where did this come from? They should be able to help trace if it actually did come from the IRS, and then contact, once again, the IRS directly. If any kind of payment, anytime someone says you have to pay something, but you have to use this specific format of payment method, and you're dealing with a government agency, that seems odd, right? Why would I need this specific form of payment option? Can't I pay? I should be able to pay any way I would want. Well, they're trying to hide up the trail, the paper trail, the audit trail of the payment. So that'll be a telling sign of a fraudulent action. So next we have payroll and HR scams. Tax professionals, employers, and taxpayers need to be on guard against phishing designed to steal Form W-2s and other tax information. These are business email compromise, BEC, and business email spoofing, BES. This is particularly true with many businesses closed and their employees working from home due to COVID-19. Currently, two of the most common types of these scams are the gift card scam and the direct deposit scam. In the gift card scam, a compromised email account is often used to send a request to purchase gift cards in various denominations. In the direct deposit scheme, the fraudster may have access to the victim's email account, also known as the email account compromise, or EAC. They may also impersonate the potential victim to have the organization change the employee's direct deposit information to reroute their deposit to the account the fraudster controls. So they can adjust the routing of the deposit to a different account. So the BEC, BES scams have used a variety of ploys to include requests for wire transfers, payment of fake invoices, as well as others. In recent years, the IRS has observed varieties of these scams where fake IRS documents are used to lend legitimacy to the bogus request. For example, a fraudster may attempt a fake invoice scam and use what appears to be a legitimate IRS document to help convince the victim. The direct deposit and other BEC, BES variations should be forwarded to the Federal Bureau of Investigation Internal Crime Complaint Center. So you want to forward these for sure, because the IRS is probably going to want to get on these because they're going after the business information at that point directly. So and that could be a larger type of action there. So they want to make sure they have a handle on what's going on with those items. So report those items. Where a complaint can be filed, the IRS requests that Form W-2 scams be reported to phishing at irs.gov. There's a link to that here, to that email address. Subject W-2 scams. Ransomware. So the next one is ransomware. This is a growing cybercrime. Ransomware is malware targeting human and technical weaknesses to infect a potential victim's computer, network, or server. So they're trying to get the malware on the server, and they're going to find some weakness in the system so they can get the malware on the actual system in some way. So malware is a form of invasive software that is often frequently inadvertently downloaded by the user. So typically in some way, shape, or form, the user has to inadvertently basically put the actual malware on the computer. Once downloaded, it tracks keystrokes and other computer activity. Once infected, ransomware looks for and locks critical or sensitive data with its own encryption. In some cases, entire computer networks can be adversely impacted. So once it's on there, once it takes hold, then it tries to put its own encryption on the entire network, which makes it now ransomable, right? So now back to the text. Victims generally aren't aware of the attack until they try to access their data or they receive a ransom request in the form of a pop-up window. These criminals don't want to be traced, so they frequently use anonymous messages, platforms, and demand payment in virtual currencies such as Bitcoin. So cyber criminals might use a phishing email to trick a potential victim into opening a link or attachment containing the ransomware. These may include email solicitations to support a fake COVID-19 charity. Cyber criminals also look for system vulnerabilities where human error is not needed to deliver their malware. So human error being in some way, shape, or form, the human opens up the email, or typically has someone goes in and they allow someone to put the information in some other way onto the computer. So the IRS's Security Summit partners have advised tax professionals and taxpayers to use the free multi-factor authentication feature being offered on tax preparation software products. Use the multi-factor authentication feature is a free, easy way to protect clients and practitioners' offices from data thefts. Tax software providers also offer free multi-factor authentication protections on their do-it-yourself products for taxpayers.